President Trump has come out very positively predisposed to certainly Bitcoin, but we think everything crypto, DeFi or decentralized financial services. And so that's going to be very exciting. But the regulations are also going to change. I think the regulatory cutbacks are going to be profound. In his first administration, President Trump said to regulators, you want to put in a new regulation? You have to take away 2. I think that he'll be even stronger on that.
Cathie Wood, CEO of ARK Invest, believes that a Trump administration could trigger an unprecedented Bitcoin bull run, propelling the cryptocurrency to historic highs. Wood views Trump's pro-crypto stance as a game-changer, forecasting that his policies could foster a supportive regulatory environment, stimulate innovation, and drive down interest rates, key factors for Bitcoin's growth. Drawing parallels to Reagan's economic policies of the 1980s, she suggests that Trump's proposed tax cuts and regulatory reforms could unleash similar economic dynamism, particularly benefiting sectors like cryptocurrency. Wood anticipates that crypto-friendly policies under Trump's leadership could position the U.S. as a global leader in digital asset. This shift would likely spark a wave of Bitcoin investments, creating a fertile landscape for further growth. With the federal funds rate currently around 5%, Wood believes any moves toward easing monetary policy could accelerate both economic activity and the expansion of the crypto market. ARK Invest, a prominent advocate for cryptocurrency, aligns with Trump's vision of a pro-crypto America. Wood envisions this environment potentially paving the way for the largest Bitcoin bull run in history, solidifying the U.S.'s leadership in the rapidly evolving digital asset space.
Hi guys, hope to see you guys at Dubai Token 2049. We have exclusive 10% off the limited super early bird tickets. Click the link below. This pass will grant you access to speaking sessions, networking app, exhibition hall, daily networking drinks, and also included breakfast, lunch, and coffee breaks, all included the package. I'd love to see everyone there. Peace out.
So let's talk about macros first. In the early days of the Reagan administration, there were back-to-back recessions and interest rates hit 15%. And that was a very difficult environment for investing. Well, President Trump is coming into office when that part of the equivalent in the Reagan administration has been done. And I remember after that, the 80s and 90s were the golden age of active equity investing. And I think we're going back there. First of all, in terms of the controversy, a deficit back then, after back-to-back recessions, 5.5%. The bond market was apoplectic about that. Investors were as well. And what they didn't understand is that the Reagan policies of tax cuts, along with lower interest rates caused by Volcker, moving from double-digit interest rates to something much lower, that those were going to be very positive for economic growth, and that we were going to grow our way out of the deficit. That growth out of the deficit started in the 80s with the Reagan administration and finished in the 90s with the Clinton administration, taking us into a surplus. We think we're going to experience somewhat of the same thing this time around. The tax cuts, we believe, are critically important, especially if Trump makes good on his tariff promise. Now, I'm not a big fan of tariffs myself, but if we're going to pair tariffs, not on our free trade partners, but on those countries that really are not giving American goods and services a level playing field, but we counter them at home with lower tax rates for consumers and businesses, that's a trade-off. That's a good trade-off. And so I don't think the criticism about tariffs is going to play out in terms of 100% across the board. That's not what we're talking about here. I think President Trump is very pro-growth, and he's not going to do anything to impede growth in that way. What will happen to interest rates here? Now, this is a little different from the 80s. Interest rates were so high at the beginning of the 80s, 15%, that really, if the Reagan administration got anything right, those interest rates would come down. And they certainly have. Now, 45 years later, they are high relative to recent history, 5% on the Fed funds rate. And they are restrictive relative to where we see inflation going. So we do believe there will be a downward pressure on interest rates, maybe even more than many investors expect in the near term, because I think a lot of activity is going to be held back by, a desire to understand how policies are going to change in the future. If we believe tax rates are going to come down, we're probably going to wait if we're businesses and consumers. This is classic. It even happened during the Reagan administration when he phased in tax cuts over 3 years. Most people just waited until the tax rates were at the point he had promised.
Cathie Wood believes that integrating transformative innovation platforms, such as energy storage, artificial intelligence, and blockchain technology, will drive lower interest rates and rapid productivity growth. She predicts this combination will lead to accelerated GDP growth and lower than expected inflation, creating a fertile environment for economic expansion. Wood also foresees significant shifts in government policies, particularly within regulatory agencies. With President Trump expected to adopt a more supportive stance toward Bitcoin and cryptocurrency, she anticipates regulatory changes, including potential leadership shifts like Lina Khan's resignation from the FTC. This could ease antitrust regulations, enabling more mergers and acquisitions. Additionally, Elon Musk's involvement in the administration is seen as pivotal. His first principles approach aims to streamline processes, reduce waste, and minimize government inefficiencies, potentially transforming public sector operations. According to Wood, these advancements in technology and governance will spark unprecedented economic growth and innovation. She emphasizes that the groundwork for this transformation has been laid over the past 25 years, fueled by brewing innovation. Let's delve further into her insights by revisiting the interview for more perspective.
So I think interest rates will be biased to the downside. Thereafter, I think we're going to see an explosion in productivity growth. That's what the convergence among the major innovation platforms around which we've centered our research. So robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing in the healthcare space. Those platforms are converging and we believe are going to unlock explosive productivity growth, explosive GDP growth, and much lower than expected inflation, because all of these platforms are deflationary. They're technologically enabled, and that's good deflation. As prices fall, units explode, and it's really important. The reason we give our research away, it's important for investors and individuals and businesses to get on the right side of change, because these are transformative technologies. So in terms of government policies, perhaps the most profound thing that's going to happen in the very near term is a changing of the guard at some of the regulatory agencies, the SEC and the FTC. The SEC menace to the digital assets movement. We've lost a lot of talent to other countries because of Chairman Gensler. And I think that's going to change. We know it's going to change. President Trump has come out very positively predisposed to certainly Bitcoin, but we think everything crypto, DeFi or decentralized financial services. And so that's going to be very exciting. But the regulations are also going to change, because we're probably going to see Lina Khan at the FTC leave her position. And of course, the strong-armed antitrust regulations that Lina Khan has abided by, those are going to go away. They've prevented mergers and acquisitions that we absolutely need. Large companies are looking at these smaller companies innovating and perhaps being very disruptive to their models, and they'll probably want to get some of that DNA into their companies. I think the regulatory cutbacks are going to be profound. In his first administration, President Trump said to regulators, you want to put in a new regulation, you have to take away 2. I think that he'll be even stronger on that. And of course, when it comes to government spending, he's inviting Elon Musk into or under the tent. Now, the deficit will go down, we think, because of growth, but also we think the inefficiencies in the government are extreme. And we do believe that Elon Musk, first principles-based white sheet of paper, will figure out ways through attrition in terms of headcount and technology, productivity gains, to really shrink the government as a percent of GDP, getting a lot of the waste out of the government. And of course, every president has promised that. I think this one will deliver with the help of Elon Musk. We do not believe that Elon's going to be leaving his companies. We do believe he'll put in place a process that will be reinforced by some of the people who will be attracted to this goal and want to be a part of helping him carry it out. So there we go. That's the macros. In terms of innovation, we think it's been brewing really for since the last 25 years. The seeds for everything we're seeing today were planted in the years when active management was in full stride, the 20 years that ended in the late 90s.
Bitcoin has surged past $80,000 following Donald Trump's victory in the 2024 U.S. presidential election. Trump's pro-crypto stance is expected to foster a more favorable regulatory environment for digital assets, with his pledge to position the United States as a global crypto capital and Bitcoin superpower. Analysts predict Bitcoin's value could reach $100,000 by year-end. This momentum has significantly boosted Bitcoin ETFs and cryptocurrency-related stocks, with the iShares Bitcoin Trust ETF climbing 11% to a record high, Coinbase stock surging 48% to multi-year highs, and Robinhood seeing a 27.4% increase, the highest in over 3 years. The incoming Trump administration is anticipated to influence regulations, taxation, and the broader integration of cryptocurrencies into the mainstream economy. Throughout the election cycle, crypto-friendly voters and major industry players advocated for a supportive regulatory framework, shaping federal and state-level discussions. Key legislative initiatives like the FIT21 Act and the Bridge Digital Assets Act aim to establish a comprehensive regulatory framework, addressing concerns such as money laundering while enhancing consumer protection. These measures could set the stage for a new era of growth and legitimacy for the crypto market. As Trump's policies begin to take shape, the cryptocurrency sector is closely watching their impact on the market. Bitcoin's value could continue its upward trajectory, bolstered by promises of regulatory clarity and tax incentive. What are your thoughts on Cathie Wood's optimistic outlook for the economy under Trump's administration? Share your insights in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.